Yo guys, I'm here with another one, right? It's your boy the Bull Online. Yeah, shout out man. If you're new to the channel and you just stumbled upon this video, please like and subscribe man, because it's gonna help with the algorithm to also reach other people who want the same content, right? Yeah guys, so I'll be just sharing a few things. Today I'm just gonna give you information with what is a fair value gap, right? Some call it an imbalance. Yeah, so without wasting any time, let's jump right into it, right? So yeah guys, what is a fair value gap, right? That's the question. So a fair value gap basically is an imbalance where one price point is being delivered in the market, right? So it could be either sales or it could be either buying opportunities, right? So basically one side is being delivered at that point in time in the market. So the market is tilted in one side. It's either selling or it's just buying, right? So examples of a value gap, guys. And then also I'll just break it down to you why it can be good information for you to use fair value gaps as well, right? So this would be a fair value gap. This is how you draw a fair value gap, right? So from this last week up there to this week at the top on this candle, right? That's where you define your fair value gap. So it's this zone going to the right, right? So here's the thing, this will be your fair value gap. So price tends to come back to these zones and react from them and then shoots up, right? So at this point in time, as you can see, only one price point is being delivered here, which is your buying pressure. The market makers are just buying here and they are not giving anyone an opportunity to jump into the market, right? So they tend to drop prices and come to these levels where they were delivering one price point, right? And then price tends to come back and react off of these levels and then shoot up, right? So let me give you another example of a fair value gap, right? So if you take a look right there, from the bottom of that week to the low of to the top of that week, right? This is a point in time where they were just delivering selling opportunities to the market. As I've mentioned, price tends to, on this third candle, price came back to the fair value gap to fill some of the orders that were left there, and then price collapsed. So can you see the importance of fair value gaps? So sometimes price do come and react off of these levels and then it will continue, right? The trend, right? And then sometimes if you take a look at the top, there's another fair value gap from this week right there to that week. Let me just remove this one, right? And then can you see price didn't come back at this level? One might argue and say, okay, it came back at the later stage, but it just went past it. It didn't hold. If you wanted to short here, you would have lost a trade, right? So the power of knowing fair value gaps, right guys, it gives you an advantage to know that, okay, you can mark off these levels in the market and then at a lower time frame wait for your confirmations and then you can trade these zones, right? So why do we need to mark these levels? I'll just give you an example. So for example, if someone is trading supply and demand, right, they'll mark off this zone as their order block. They'll say this is the break of the structure, right? They'll say this is a break of the structure, this is an impulse move that broke structure. Therefore they'll be anticipating that price will move from there and pull back to this order block and then for it to shoot up, right? So they would have their long positions right there waiting for a pullback to fill in and then for it to shoot up, right? For whatever the risk management that you would have been using at the time. So now this doesn't happen, right? And price doesn't pull back completely to this order block, right? So now here's where it gets interesting if you understand fair value gaps, right? So you would have marked this as your order block, but price doesn't come back here. But then had you marked this fair value gap, can you see the top of this week to that other week on the top candle? See, price came back and filled this fair value gap and it went up. So some of you who are trading like higher time frames would look at this move and say, this move is small, maybe you'll get a 1:2. But if you're on a lower time frame and you have confirmations here, you can get a big move that actually this could cover a lot, like from here to there at a lower time frame. This is a huge move, right? I'll get when I get the time, I'll share what do I mean by that. So can you see price pulled back and it went up? So imagine if you had this information, you place your order right there, maybe your stop loss there, and you take your 1-to-1, right? For example, I'm not saying 1-to-1 is the best risk to the reward strategy, but if you were to hold, for example, had you held on it, put your stop loss there, maybe eventually you would have hit maybe 1:1.5, right? But that's just an example, guys. But I'm just trying to highlight the importance of fair value gaps, using them with order blocks, right? Just so that you don't miss any trades, right? So another example that we can take from the market is here. There is a fair value gap at the bottom there, but price didn't come back here, right? It didn't come back to fill this order. It's okay, life goes on, right? Because sometimes the market won't do what you want it to do. Remember, when you are trading, we simply react. We don't chase the market. If it doesn't come to us, we let it go. We wait for another opportunity to present itself. We don't chase the market, right? That's the key in trading the market successfully. You don't chase it, it comes back to you, right? So yeah, guys, I hope you have some understanding of fair value gaps, that they can be very, very powerful, right? As much as sometimes price doesn't come back to fill them, but sometimes they do come, right? And fair value gaps, you can find them also on your 1H time frame, right? At your lower time frames. See, for example, here price didn't come back. It didn't come back here to fill this order. And then this one, price did actually come back to fill this order here, right? It would have triggered this on this candle, but maybe by depending on your spread, you would have been triggered on this trade here to the high side, right? So even on shorts, there's your fair value gaps. Can you see when you extend it, price came to a fair value gap and then price went down, right? So imagine if you're waiting for price to come back to an order block up there, price wouldn't have came to your order block, right? Or it would have came but at a later stage, right? Depending on your trading plan or whatever, right? So yeah, so guys, I hope you learned something from me and the video won't be too long. So yeah, guys, please do subscribe to the channel, like, share, comments what you want to see on the channel. I'm happy to share more content like this in the future, or if you have any questions, and I'll be also sharing how I trade the markets and how I get into challenges, and also I'll be sharing a lot of content with you guys. And as much as I'm giving out knowledge, guys, I'm also happy to learn from you, because you also be learning from me. So yeah, let's create this community, guys. Please like and subscribe to the channel, and yeah, peace. See you on the next one.